I'm so honored to announce that our main sponsor is microcapclub.com. When I first joined the club, I realized I had just entered one of the most unique investor communities in the world. It's a private network of 270 of the best microcap stock pickers globally. Since 2011, members have profiled more than 1,300 companies, and over 300 of those have gone on to become multi-baggers. That's the power of this group. It's where ideas surface long before institutions ever notice them. And if you're obsessed with finding great businesses early, there's no better place to be. Surround yourself with some of the best investors in the world by visiting microcapclub.com and applying to join the club. That's microcapclub.com. Today I'm joined by Bill Brewster for a wide-ranging conversation on how to think clearly in a noisy world. You get into the craft of asking better questions, what great investors like Bill Miller and Draken Miller can teach us, and the role of cycles and multiple income streams. And the personal side of investing too, from burnout and managing emotions to finding clarity and balancing life. This one's about more than markets. It's about how to make better decisions when the world feels overwhelming. So yeah, Bill, it's a real pleasure to have you on. And I've been an avid listener of your podcast for a while and wanted to chat with you for a while as well. So I'll jump right into the questions. And I wanted to ask you, when everything feels noisy and distracting, like what helps you get a clear head or like think clearly about things and problems?
Well, I think that one of the answers is I call my buddies Francisco and Alex, and I tell them all the crazy stuff that's going on in my head, and then we make some jokes, and then we try to sort of calm down and, determine what reality is. For me, I've always done best in a group. I know that that's not the most, Buffett might say that he don't talk to people, or I don't know what he would actually say, but I understand the potential risk of groupthink. I tend to do better talking through things with people. I'll tell you, like, I was not calm in April with the tariff tantrum or whatever. I was a net seller. Thankfully, I have done this sort of long enough to tell myself there's a element of the portfolio that I think of as just beta that should not be touched no matter what. And I try to minimize really discretionary swings. So the stuff that I sold was stuff that I didn't love anyway. Like for instance, and Bill Chen, if you're listening, no offense to this, but I had owned single family or multifamily REITs, right? Mid-American and Camden. And at the time, I kind of thought, well, if we really do go off this path of my perception of the path that we were going on was sort of a decoupling. And I still think we're on that path. But if we were going to rip the Band-Aid off, I didn't see how owning multifamily REITs was a better idea than I own some of these pipelines in America. And one thing that seemed pretty obvious to me was that the administration was going to try to use America's natural gas production as a bargaining chip. I was unsure what might happen with the multifamily. So, I sold. And then the other thing that I let go of, which I don't like anyway, is Disney. And I probably shouldn't have owned it. I think it'll work as a stock, but I have some emotional issues with that particular security that probably should just preclude me from owning it. That said, maybe I should buy it just to sort of do the opposite of what I think.
Interesting. And maybe if you're fine with it, I'd like to double click on that. Like, what sort of emotional issues can you have with a security that doesn't allow you to own it, right? So I'm just curious, and if it's a sensible topic, it's okay, we can skip it. But
I'm not like that emotional about it. I fundamentally don't think that. I think, how do I say this without getting myself in too much trouble? Sometimes I think that management teams get reputations and they ride a wave of, they're riding a tide that is rising. And Disney has not been riding a rising tide. And I think that there's sufficient evidence that the C-suite has been hollowed out. I did not like what I thought that I saw from Bob Iger when Chapek took over. I understand Chapek had it, did some things wrong, but I thought that he was undermined from the jump. And on top of all that, like I think Walt would roll over in his grave if he knew what Disney had become. So I think the stock will probably work. I think they're on the other side of a lot of the disruption. I'm sure that they're going to start to charge people for their media like they charge people at their parks, and they'll probably beat on all their numbers. But I just I don't have the same affinity for that business as that some other people do.
Got it. All right. So now stepping back to, okay, April, you kind of mentioned you weren't thinking that clearly, or wasn't like a clear moment for you of knowing what to do or what not. So you sold part of your portfolio that you didn't like as much as the rest, right? So what do you do in those situations? Like now you have cash on hand, I imagine, if you sold something.
Well, I swapped a decent amount of the securities, but yeah, I mean, some of it went to cash, not too much. We're talking a couple of 100 basis points here, nothing huge.
Got it. And so what criteria do you kind of use in that situation to kind of take advantage of that and upgrade your portfolio, or hopefully upgrade it, I guess?
Well, I mean, I just said like I tried to buy things that I thought would benefit from the policies rather than stuff that I thought might be flying in the face of them.
Mm-hmm.
Okay. There's an element of bumping up against max position sizes. There's an element of, I did cost myself some performance when I did that. So it was not a perfect decision, but everybody's got different life circumstances, and I didn't know where we were going, and I felt like the portfolio needed to be, I probably had a little bit too much risk on, but I don't really regret, like I didn't handicap myself in any permanent way. And, it's just, I'd be a real liar if I sat here and told you I had optimal decision making at that time.
Okay.
I could tell you, I think in COVID, I had pretty solid decision making, but, there was, I felt like during COVID, the best thing that I could do is get off of social media, because it was like full blown panic and dopamine and all that stuff, like all day long, it felt like. And I mean, to this day, I have no idea if I made good decisions because they were good decisions, or if I made good decisions because the government bailed me out. Like I have no idea.
Yeah, that's actually an interesting paradox about investing, because you're always dealing in probabilities, and sometimes the outcome might actually be what you expected, but not for the reasons that you think it happened, right? So how do you deal with that kind of mismatch of a feedback loop that you have in investing, and how can you actually improve? Like, for example, myself as a young investor, how can I distinguish what's sort of signal for my self-improvement process as an investor and what's like noise?
Yeah, I mean, I think that, my buddy Jake Taylor started Journalytic for this exact reason. I would encourage you to probably use his tools and write what you think is going to happen, and then see whether or not it does. I think if you've listened to me over the past, I guess I've been podcasting since late 2019. I think that there's been a difference between a guy that, I mean, some of it was for ratings and some of it was reality. I mean, I used to be a lot more confident than I am now. I always joke, I say I'm 60% confident, but the 40% comes up 60% of the times. I just think, the idea, I guess that my real answer is I don't think you have to take big swings, right? So I think we've got a level set about what people's goals are. So when you're asking me these questions, is your goal to have returns that are equal to or better than Buffett's
over the same time period? I think the goal is that. I'm not like saying I will achieve it, obviously, but I think.
Well, I mean, if that's the goal,
actually,
if that's the goal, I think you probably have to be pretty selective about where you bet. I think you have to be really honest with yourself about the unknown unknowns. I think you have to be, I don't know the answers because I don't do it, right? Like, That said, that's not really my goal, right? My goal.
Okay, so what's your goal?
My goal is to try to compound some degree of wealth at 1% to 2% real over time.
Okay.
So
And can't
the
you
way I
just
think
achieve
about
that
it,
with S&P?
well, it doesn't necessarily have to be in the S&P. Like, I don't necessarily want the S&P risk.
Okay.
Now, I think it's a fantastic investment vehicle, and I think if you said to me, I'm going to buy a company that has widely diversified geographic revenues, expanding margins, does business in the greatest country in the world, and it trades at 24 times, and I can own it in perpetuity, and I have almost no concerns because it has business units that grow like crazy, and I know that I'm going to capture those business units. I don't think that's an insane thing to own at all. I think it's probably a really good thing to own. So I think owning SPY makes a lot of sense for most people. But if your goal is going to be to outperform that, then I think you need to take probably bigger swings, fewer swings, and be really, really selective.
Got it. And so on your personal portfolio, how many positions do you keep at any given time? And I know you're big on also diversifying like income streams and having other assets that not necessarily stocks. But yeah, just wanted to learn a bit more about your personal approach because
I own
I
mostly
think the most
stocks.
common goal
I'm
is
pretty tied to public market beta. I think right now I have like 22 positions. I sold one yesterday, so maybe it's 21. But I mean, that's basically what it is. It's hard to keep up with. I mean, it's hard to keep up with that many, to be candid. So, then I own. I mean, I have exposure to some value ETFs. I think value is a pretty robust factor. I think if you lean into a factor, you need to have a group of people that you invest on behalf of, or your own personal mentality that's okay underperforming for a substantial period of time. And I don't know what people say that they get fired for, but I'll tell you, it feels worse when the market, to me, feels worse when the market's going up and you're underperforming. Oh, the ability to actually watch that happen year after year after year. I mean, all you have to do is look at the amount of value managers that have disappeared. Now, that said, I think a lot of them were not particularly good at their jobs, so they probably deserve to disappear. Hard to pay an active manager when an ETF can do the job and avoid taxes.
Makes sense. I want to sort of dig into why your goal is to compound at 1 to 2% real over time. Why not aim higher, I guess? Or yeah, I think that's the question.
I think it's just a matter of life circumstance. I mean, I got kids. Like, I don't, if I aim higher and I fall way short, that changes my life a lot more than if I aim low and exceed my bar.
Nice. I guess that's the Charlie Munger low expectations mental model, I guess.
Yeah. I mean, I hope to do better than that. Don't get me wrong, but I don't, I think when I historically have thought about aiming high, it has induced some risk-seeking behavior that at this time in my life, I mean, I'm an old man. You're a young kid. You can do it and you can bounce back. I have people that depend on me.
Right. Okay, so I think this is the perfect segue on like talking about multiple income streams, because this is something I've been thinking for myself. Obviously, I'm a student, so I don't have to think much about it. And as you said, there aren't people that depend on me. But I think it's a pretty interesting concept when it comes also to emotional stability, because just feeling like the security of having a diversified income stream. So what do you recommend people, I guess, and what works well for you in your personal situation?
I don't know. I think it's a matter of temperament. If the goal is to generate Buffett-like returns, he did not have diversified income streams. So it's like, what do you need? Not to be too, I don't know exactly what the words that I'm trying to say are, but I mean, I think what Buffett would say is forget about diversifying your income streams. If I were young again, I would work as hard as I possibly could to land the best job in a field that I wanted to land in. And then I would work my ass off to succeed in that field. And then I'd probably just index.
Okay. Yeah.
Which I know is like not a sexy answer for an investment podcast. To the extent that investing stimulates your brain and whatnot, I'd have a portion of the portfolio indexed, and then I would do that. I would invest another portion. If you want to be a professional investor, there are ways to get in touch with people that share their knowledge. One of the ways that I did it is Twitter. I don't know if that's particularly great for your brain, and I had a couple things go my way that helped me accumulate a decent following, not least of which is Toby Carlisle put me on his podcast. But like there's was just advice the other day that you need to diligence the PM that you're going to work for really, really hard to make sure that you end up in a good seat rather than maximizing your day one earnings. This person was advocating maybe forgoing a decent amount of money to get to a better place so that your year 10 earnings are much higher. And I think that that's smart, and to the extent that you're following companies, I mean, a company like Fastenal doesn't sound like it would be great to go work for. You're not going to see any day of the life of a Fastenal employee, things on TikTok, because they're probably staying at Motel 6s and stuff. But it's a company that seems to grow share, executes like crazy. You can learn a ton about business working there. And to the extent that you get some share matches in your IRA, like it's probably going to be a pretty good equity to own over time. Those are the kind of things I would be thinking about rather than thinking about diversifying my income stream.
Okay, got it. I think that's a very honest answer, and it's all I'm looking for in these kind of conversations. And I'm also curious to know, like you mentioned, growing a Twitter following and like basically exposing yourself to other people through the internet. And I think you're a great example of that through your podcast. You were one of the earlier ones to start doing this, and I'm curious to know personally what you got out of it, and kind of all the lessons you might have learned from these conversations. And just curious to know all about it, because I feel like you're a couple of steps ahead of me when it comes to experience in this field. And so just looking to learn a bit from you on this side.
I don't know. I guess what I got out of it in the beginning was some sort of ego boost. It was nice that people liked, and there's I sort of view my podcasting in two sort of iterations, right? I Value After Hours was designed to be a show that was informal and something that you would kind of listen to as if it was a couple guys at a bar.
Okay.
If I were at a bar, I might say some stuff that was a little bit shocking. So, and the other thing is, I probably did some things for the sake of ratings and or myself. I don't know what it was, but I'd probably do some things differently. On the other hand, it did. The show was pretty successful, and I think I had something to do with that. So I don't know how much different I would do. My show has been more of a long form interview, listen type show. I personally prefer the side of finance where I'm asking questions and not giving advice, or I understand none of this is advice, but financial entertainment that involves telling people what you think about securities. Right. And, I would say that Curate was one of the more formative sort of, I have approached talking about markets differently after Curate and this one microcap that I have loose affiliations with, I guess, for better or worse. Curate sort of, I still think was a good idea that some really bad things happened to, and I would be curious what happened. If you could go back, for those that don't know, it's QVC and HSN, and it was a very, the thesis was habit-based, and they had a fire at a facility. That fire, I think, was more devastating to the business than some appreciate, not least of which I think some of their higher margin rabid fans sort of churned as a result, and the business has never come back. And I had mentioned that I sold it, but you never mentioned that you sold something as much as you mentioned that you like something. And people came to me, after it was down 50, 70%, and it eventually was down 95. And they kept, a few kept asking me, like, what do I think? And I don't really care for that. That's not no matter how many times you can tell people do your own work and don't follow me. I don't like the idea that people do follow. So for those reasons, I don't really talk single names unless I certainly don't pound the table anymore. And the other thing is, it's a humbling experience to think something's that good. And, I didn't think it was like some growth business in perpetuity, but I thought if the customers that they acquired in COVID stuck around like historical customers, it was kind of a cigar butt, and turned out to be a cigar that burned out rather than one that you got a puff out of. So that was, one of the things. And I guess that the other, learning that I've gotten from all this is dopamine's a hell of a drug, and it's fun at times, and it's probably not great for you at others. And there's a reason that some of it's laziness, but there's a reason that my podcast doesn't have thumbnails and shorts, and I'm not like chasing views. I'm not really trying to build that, but it's got trade-offs, right?
Got it. And so, like, I mean, I think from what I hear, like you had some kind of hard lessons from podcasting. One of them is something I think a lot about, which is the effect you have on the companies you talk about, or at least like the stock price of the companies you may or not talk about, which I think is very powerful, and I appreciate your honesty. The other one is about the dopamine, right? So maybe you could explain a bit more on that. So are you trying to optimize for like what are you optimizing for on your podcast? That's the question.
Not much anymore. I mean, what I try to do is use the network that I have to have interesting conversations and hopefully add some value to some people's lives when they listen. But I mean, that's more or less what I'm optimized for now.
Got it. And I saw you recently landed like a sponsorship with FinChat and so on.
Fiscal.ai. Thank you very much. They've changed their names there. Yes.
Fiscal.ai.
That's
You're
right.
completely
Use
right.
fiscal.ai/brew if you're interested.
Yeah, that's a great brand ambassador right there.
That's right. It's a good product.
Yeah, but anyway, I wanted to kind of connect the dots and see whether, because you just mentioned you're not optimizing for like growth or like views or whatever it is. But at the same time, it's curious to know that the brand actually felt that it was valuable to support you and you support them, I guess, or have a sponsorship kind of relationship on there. So do you think that was because you optimized for like long form conversations and they just felt it was like a good fit, or like was it more of a random thing that happened? Just curious to know what's the story behind that.
Well, I've known Braden for a long time, and I've interacted with Ryan Henderson for a long time. So I think that they were looking to get they just raised money. For those that don't know, they are a data provider. They're like, if you want to see what financials on any company are, and they're quite good. I mean, look, I like the product, like I use it. So, they approached me and they said, would you be looking for a sponsorship? And I think ultimately they wanted some reach to my listener base, and I was happy to give it to them. And I don't think that the tough thing about the podcast model is it's just not a very good business unless you get to real scale, or you could charge your guests, which I have historically not wanted to do. But I think they probably see myself as somebody who doesn't sell out, and I think they probably think that my brand is worth partnering with. And I'm glad that they do, because I do like the product quite a bit.
Yeah, I actually use it like every day. I was just researching a company, and I was using it. I'm not sponsored, but
there you go. Look, see here, we'll give them a plug. Yeah. I was looking at Portillo's, and
let's go.
So look, this is a restaurant stock in the U.S. I don't, it's got some problems. But I just like how the interface works. And then I like the Copilot feature. I know that, some people don't or use it as much, but I was just kind of curious. I said, why does Portillo's appear to have seasonally weak Q1 restaurant level EBITDA margins? And the LLM, the nice thing about it is it gives you answers that are trained on data that you can actually trust. So that's why I like it. I think that they probably partnered with me in part because I can do things like this and show people, hey, these are the KPIs that they have and whatever. But the podcasting business is interesting. I don't know what you've experienced, but it's in my experience, it's been a loss leader, not an income maker. But I could probably have worked harder on the income side.
Got it. Yeah, I guess. I mean, we're having this
Fiscal.ai/brew. I won't do it again.
We're having this conversation because of your podcast. And so I think most of the value you get out of it, and maybe this is one of the most like two-sided conversations I have for a long time. Usually it's more me asking questions and not saying anything, but I feel like I can also share a bit my story. I think it's more about like the networking opportunities, because you really get to meet some really cool people and connect, because I don't think you can really connect that deeply just by, I don't know, text or something. And if you don't have the chance to actually get together with someone in the same physical space, then this is the second best option you have, like actually having a long form call and trying to understand how people think and why they like what they like. And so, yeah, I think we are on the same page.
I've been doing it for 6 years. So, and the show has not been sponsored forever, so
Right.
I agree with you. I mean, I think I have focused on my own podcast. I've cut my production costs. Riverside has gotten a lot better for editing. I've learned to edit. There's a trade-off on how much time it's actually worth. But I agree with you. I mean, I think that if you can run the podcast at a minimal cost and you can prepare for interviews and do a good job, the network that is opened up is unique. And I would not have the network that I have without it. So I definitely think it's worth doing, especially if you're talented, which if people are listening, worst case, you have a lot of chutzpah because most people won't do these. I don't know what the percentage is. Most people don't release more than like 5 podcasts. So to stick to it and do it for a long time says something about you. One of the things I'll compliment myself on is if you ever take a course or read a book or whatever, and people say, 80% of people won't get this far. I always see that line. So I don't know if it's full of shit and people are just marketing to me, or if I'm one of the people that actually continues doing things, but I do have some stick to itness, which I think helps. And I'm not afraid to sound like an idiot, which helps. I mean, I don't mind. Sometimes I listen to stuff that I said back. I mean, I was just listening to a previous podcast that I did in season 1. Part of me wants to take all of season 1 down because I kind of don't like myself in that. But, I think there's some value in leaving that up and not liking yourself and reminding yourself that you don't particularly like the person that you were or what you were trying to accomplish. So I don't know. Part of me thinks if I stayed that person, my podcast would be bigger. But as I said, I don't know that that's the thing to optimize for.
Yeah, for sure. And I guess people will now go to season 1 and kind of check out what you're talking about. I can also
there's some good episodes, but mostly yeah. I would just ignore me if you go like the business brew. I think I had a podcast with David Robinson that year, and that was very good. And there were some really good ones. There were also some ones that I really sounded dumb on. So, I think my original version of reality, and I still think it would be a good concept, is to be like more Joe Rogan. Part of me wants to live a healthier life now, so I don't have the same interest. But the other issue is once it was easier to get people to take risks and me to take risks when there were fewer people listening, because the downside was pretty minimal for all involved. Now that there's like real people that listen, you get a little bit more formality in the conversations. It would be
True.
nice to not have a finance podcast where I could just bullshit with people.
I mean, you can always start a spin-off and like, yeah, the Bill Brewster experience or something. But you give me Joe Rogan vibes, so I encourage you to do it.
Yeah, well, I think he's more talented than I am, but thank you for the compliment. I appreciate it.
No, just like the way you approach. Yeah, it's exactly that. Like, I interview CEOs. I interview like professional investors as well, and like you can tell they're there just for the interview. Like they don't really want to get into, I don't know, just the personal side of things, or I don't know. It's just
The thing
different.
that sucks about that, in my opinion, is I think one of the biggest benefits of the podcast medium is the ability to get in people's ear and them to figure out who they think they're listening to. And if you believe
Exactly.
that it is true that people do business with those that they like, it doesn't have to be this big, like, we're going to share a bunch of emotions and cry on camera thing. But to the extent that you're willing to let people in a little bit, I think it makes it a much more effective use of time than just going through, you know, whatever the show. One of the things that I think does it, some guests don't love, most guests don't care, but some guests don't love. I mean, a lot of people are like, can you send me a list of questions?
Yeah.
And my answer is no. Like, I'm not. I mean, I'll send you high level topics that I think might be interesting, but I'm not going to do. Here's some questions. You write out your answers. I ask you something. You tell me, and it's like an hour of your marketing. I'm not interested in that. I don't think anybody is. I think it's boring to listen to.
Yeah, for sure. Actually, it's really funny because this is the first interview I haven't wrote down questions. I just have bullet points on a different tab and just going through them. And I feel like it's a much more natural kind of way to do a conversation, to have a conversation, because when you meet a friend at a bar or like when you meet someone at a conference, you're not going to, okay, let me look at the questions and actually go through all of them in a checklist style. You just like ask whatever it's on your mind and have like a back and forth kind of dynamic. So
well, it's what I think all of the best podcasts do well. And I think, to your point, I think having bullet points on another tab is smart, because naturally a conversation will end up petering out, and it's like, okay, well, where do I go next? And to have the bullet point as a good sort of trigger in your mind to say, okay, well, let's delve into this topic. But you're, in my opinion, as a host, you're able to do that because you've done the background research, so you have a general sense of how this person thinks. Pull out a couple nuggets, and then you can have an hour to an hour and a half conversation with them. The just like the questions, I almost think can get people a little lazy. The other thing is, people, if you let people give a written response and they're all prepped, you don't really find out what they really think.
Yeah, it's true. Actually, it's funny because like I interviewed the CEO of Bill Direct. It's a microcap company, and at the end of the interview, I think there's nothing wrong sharing this. He thanked me for not sending him the questions beforehand. Because
I like that guy, probably.
I went like back 2 years on his LinkedIn kind of feed, and he was posting some really interesting quotes about like his personal diary, right? So things he was going through in the business and stuff. And he like was so pumped that I was like bringing back these memories, and like, so yeah, it's more like genuine. And also as a host, I can tell you that I'm much less like kind of focus on going through all of the questions and okay, what's next, and actually listening to what you're saying, rather than I think it's more natural. All in all,
I agree. I mean, man, you asked me kind of like the goals of the podcast. One of the things that I'm optimizing for, and this is going to take a long time for these seeds to grow, but it would be nice to be able to have ins. Like, one of the things that investing and studying investing does do for you is you get a sense of good companies in good industries. I would like to try to use the podcast to help my children eventually get jobs in those good companies in good industries. And, you know, I mean, that's all I want to do is make my kids' life better than mine, right? So to the extent that I can optimize for that over time. That's probably the main goal.
Yeah, I think that's a beautiful goal to have. And yeah, I'm not a parent, but I think most
Enjoy the
parents
time
want.
you're not one. You can think about these things for the rest of your life once you are one.
Yeah, I think that's good advice, actually.
Yeah, I mean, I lived a great younger life, and now I'm living a great older life, and it's you know, I can't believe that I think of the things that I think of now, but it's what happens.
Yeah, and so do you hope your kids will be into investing, or like?
I don't really care.
Just
I just hope they're happy. I know it's kind of cliche, but it's true.
got it. Nice. And okay,
My one really wants to go
yeah,
into the military. I hope he's not like on the front lines, right? That's what I hope.
yeah, that would be kind of, I guess, worrying.
Yeah, I would like to
But
sleep in my old age.
yeah, I think actually, like, the U.S. military is kind of a great school. So if you're not actually in the front line, you may learn some really valuable skills just and actually help your country as well. So I always tell my friends, like, if I was in the US or like Israel or something, I'd probably apply. But maybe I say this because I'm not in the US and Israel. So
Well,
yeah,
as long as you're not furthering imperialism, I think being in the military is a good thing. I think
yeah,
some of the things we've done as a country, I wish we didn't. But as the foot soldier, you're not making those decisions, so it is what it is.
Definitely. And I want to double click on the topic of asking great questions, because obviously we already went through, okay, let's have like bullet points and not like hard questions in a checklist. But I think it's such a big art. It's not, it's really hard to learn. So maybe if you can pass on a few insights or lessons you learn throughout these 6 years that I can kind of use in a practical way, it would be really helpful.
To the extent that I ask good questions, the only reason that I do it is that I'm genuinely interested in what the person is saying. And if you're listening to the answers and thinking about them, I mean, you're gonna miss many, right? Like the amount of episodes that I listen to, and I'm like, oh, why did I not, ask a follow up there? It drives me nuts. But it's just it's a consequence of having a conversation with somebody. The nice thing about, to the extent that you and I can do it and people are agreeing to it, at least we're having conversations with interesting people that they agree to record.
Yeah.
I'm sure if I listened to my life, I would be like, oh man, I missed this, missed that, whatever. But I just think being 100% present with somebody in a conversation is where the good conversations come, or good questions come from. And doing the work beforehand, right? I mean, I try as hard as I can to really know within reason who I'm talking to. I'm not going to dedicate more than, call it 8 to 12 hours. Like that's, once we hit there, I'm sort of, I'll read a book, right? So that's probably a full day of work. But I just think background matters.
Mm-hmm. Yeah, for sure. Actually, I was thinking back when you were saying this, and there are some conversations where I feel like I'm not present, and so maybe if I can take one insight or practical, like, actionable step from this is like, make sure you have the right conditions or like the right structure that allows you to be present at that moment.
Yeah.
Because
And look, it depends who you're dealing with, but if you and I were talking, today, and you honestly didn't feel right, I would rather you say to me, I want to give you the best interview that I possibly can, and something is off right now, and like I can't do it today. Would you mind rescheduling? I'm open to that. Some people are not, right? So you got to read who you're talking to, and if somebody says no, then you got to do it. But I would encourage you to, get good sleep the night before and try to show up.
Yeah, definitely. Yeah, sometimes I feel in my personal case it's not as much like, I feel thankfully I feel good most of the time. I'm like 19, I'm studying, I don't have so many things to worry about. It's more about like worrying whether I'm asking good questions, or if people will like this, or if this will be like a good
you can't think
interview.
about that. Don't think about any of that shit. The question is, am I having a conversation that I like?
Mm-hmm.
It's advice that I did not understand until I understood it. To the extent I am doing a podcast for one person, and that's me. I am very, very thankful that I have a group of fans that also like listening to the things that I like listening to. But at the end of the day, like, I don't care if an episode bombs. I'd obviously prefer for all of them to do great, but I have no idea how to predict which episode takes off and which one doesn't. I did one with John Huber. It did a massive, I mean, for me, right? I think it did like 27,000 listeners, which was huge. I didn't think it was going to do that. And then I've had episodes recently that I've been releasing that I'm like, man, these are badass, and maybe 3,000 people listen. And it's like, okay, I don't know. I have no idea how to predict this. What I do know is if I have a conversation that I like, some are going to take off, and hopefully the shoulder programming takes off, and I try not to release any garbage into people's ears.
Yeah. Yeah, it's funny because sometimes like the episodes I think like went the worst, or like the conversations that I didn't like as much are the ones that actually do better. And the ones I really enjoyed and like, wow, this was a super conversation and I'm super motivated after it, like they maybe do a couple hundred views or something. So yeah, I think there's no correlation between like the quality of the conversation and a single episode like viewership. Maybe over time that will compound and actually go to intrinsic value.
Yeah.
But
Yeah, that's a good way to think about it. That's a good way to think about it.
yeah. But it's funny because, for example, I interviewed Jason Hirschman and I was so tired that day, and I feel like I was like half sleeping throughout the conversation, and it was literally the best performing episode I've ever had.
Yeah,
And
well,
so
he's a beast.
yeah, and people really liked it, and I think there was one bad comment saying like this host is so bad or something, but I mean I get it.
Yeah,
Um,
I've had a couple of those. I've had two in particular that I remember, and they're probably 5 years old. Although I will say that there was an element of truth in both of them.
exactly. So yeah, I think it's fair. Like sometimes you're not at your best, and people notice it, and that's fine. That's part
Well,
about yeah.
if you going back to my comments on season one, I mean,
Mhm.
I talked way too much and had it way too much about me. And I remember there's somebody on Twitter, they go by Ebit Daddy. They have a way of telling you what they think, and this comment was not that rude, but it was George Levitas, and I remember they said, I enjoyed the parts where George talked, and I listened back to the episode and I was like, man, I did talk a lot, and I'm here, I'm interviewing George because he's somebody I want to learn from. I'm talking about some stuff that I don't know anything about, right? Like shorting. I mean, I have no idea how to have an actual conversation of shorting. I know the theories of it kind of from talking to people, right? But like, I don't know how to execute it. And here I'm talking to him, and I don't know. I reached out to him after. I said, I'm really sorry, right? And I don't know what to tell you. And then I reached out to Ebit Daddy and I said, I think you will probably see a change in me after that. And I think that you probably have. So sometimes the harsh comments are good to see and good to listen to.
Yeah, 100%, 100%. I think just taking feedback is one of the greatest things you can do because most people are not going to just start insulting you for no reason or like
Yeah, the internet's a
throwing.
weird place, man. I don't know. It's something to it's a weird place to I don't know. I don't know. I do agree with you, but I also think there's just some people that are assholes online.
Yeah, yeah, for sure. I mean, there's everything, right?
Yes.
Um, yeah. So, switching gears again, and maybe coming back to investing. I'd like to know who are your biggest influences when it comes to actually investing. I know you mentioned Bill Miller in your
Yeah,
website and
that's marketing
Druckenmiller.
bullshit. Like frankly, I mean, look, the people that I've listened the most to are Buffett and Munger.
Okay.
If I was sitting in front of Charlie Munger and Buffett with my process, would they approve? Probably not,
Mhm.
right? But I do think fundamentally understanding, and this is not the way to perform lately, but I do think that understanding that you own a share of a business and the price that you pay matters. is an enduring concept that over time should save you from disaster. Will it help you stay with the market? Probably not. Certainly not in frothy times. A guy like David Gardner, it's funny that he has had such an influence on how I think, but just reading someone like him and how he thinks was so offensive to my senses, coming from somebody that studied Buffett. I mean, here you have a guy who says, I look for highly overvalued companies whose stock charts have gone up, and those are the companies I want to buy. And it's like, this doesn't make any sense. I thought you're supposed to buy things that are cheap and getting cheaper. And I just did an interview with him, but where I think that, one, he's speaking to a retail audience, which I think matters. Two, I think that the idea of looking for those stocks, looking for them that when they're going up, minimizing your initial position size, requiring that if they are lower than the price that you bought it at, they earn their way back before you add to them, and then giving yourself the ability to add up on business results that are positive. I think that process is likely to avoid a terrible scenario. Will it outperform? I don't know. He maintains that he is, older now. I don't know what his age is, but he has invested this way his entire professional life. He has not changed it. So I think that at a minimum, it has worked for him and is worth considering why it has worked for him. It's possible that some people will reduce that to, well, he's basically just playing a flows game, and the flows continue to go, into the stocks that he likes. To that, I would say we're all trying to own stocks that go up. So maybe a flows game isn't that bad to play. It may not be one that feels stable to traditional value investors, but I think that doesn't make it wrong. One philosophy that I really don't know enough about, and it's time that I just educate myself on, is I think it's the Investor Business Daily CanSlim method. And I'm pretty sure that involves charts, and charts. I don't think looking at charts makes a ton of sense on its own, but I also think it makes sense. I think ignoring charts completely is pretty dumb. I think that's a good way to potentially get run over. I think, one thing that really saved me over the past 2 years or 3 years was John Hempton once upon a time wrote a post about position sizing and averaging down and having a max position that you are humble enough to realize that maybe you don't know what you don't know. So having a position size at cost, I believe he said 7% of cost is his. It should be on the Bronte Capital Substack maybe, or his old website. But I mean, that was I had a stock that went down a ton, and the amount of times that I wanted to buy it but didn't, it saved me a real amount of money. So I think that there's a tension between the Charlie Munger I've had over 100% of my net worth in one security or idea. I think he said idea. I don't know that he said security, but Alex Morris from The Science of Hitting wrote a book that summarized Buffett and Munger's teachings, and I think that's a solid book to read through. But anyway, that's probably, you can find that in there, or you can find that quote in that book. I just think that when people hear concentrated investors talk about how big they've swung, my learning has been, one, they probably do deeper work than you do. Two, you don't hear about all the people that swung and went broke. Three, it's you introduce the risk of ruin. And I'm trying to do the old Charlie Munger, tell me where I'll die so I don't go there. I do not want to die because I got overconfident on a bad idea.
Yeah, I think we all go through phases, and I definitely went through a phase where, okay, let's put 50% of the portfolio in one name, and then gradually I gravitate more to like spreading a bit more your bets, because I guess like the market is a humbling place, and you really learn from those bad experiences, and there's like thousands of ways to actually make money. And so this you mentioned this David Gardner, what's
Yeah,
his name?
he founded the Motley Fool, and I think if you're honest about what he does, he has an income stream that's subscription based, so you have to factor that in. He's always got subscriptions coming in. There's a marketing element to what he's doing, but I fundamentally do believe that he believes what he's saying. He just wrote his last book. It's called Rule Breaker Investing. I do not get paid to plug that, and you know, if I were younger, I would read it for sure. I'd read it if I was older, but I've read most of what he's written at this point.
Yeah, that's very fascinating. I didn't know about him, and as you mentioned, they're so like it's so counterintuitive to everything you've learned about Buffett and Munger, but yet it works, right? As you mentioned, or he
Yeah, well,
claims
like,
it
dude, his
works.
cost basis in Amazon is in the cents, right? His
Yeah,
cost basis in Nvidia is in the cents. He owns things for a long time. Like, he will truly own a security for 20, 25 years. So on one hand, you can say, you know, over the short term, he's benefited from multiple expansion. And I think he would acknowledge that. He has acknowledged that to me. But fundamentally, he has benefited from the businesses exploding in a
yeah,
good way, right?
yeah. hmm And so, how many positions does he have at any given time? I imagine it's like thousands or hundreds.
Yeah, I can't really speak to that on his behalf. I would say pick up the book and he lays it out.
Uh-huh.
I know that he
Okay.
has he advocates for no position to have an exciting amount when you're establishing a position. He doesn't want an amount of money in it that kind of gets your senses tingling, because he says when he's done that, it has not led to good outcomes. But that doesn't mean that you can't add to positions that are working. And I mean, he has had massive concentration in his portfolio at times, and his portfolio is very volatile. I don't know that his approach is for everyone. I just think if I'm in your shoes, I might read it and say, okay, well, is some of this applicable to me?
Yeah, yeah, for
And
sure.
as far as like me saying that Bill Miller's an influence on me, I mean, that guy he was super right on Restoration Hardware back when it was kind of a junky company going through a turnaround story. He was really early, not quite as early as some, but I mean, he was one of the earlier mainstream people to say I would have 1% of Bitcoin in my portfolio. You know, he's just, I like that he's not afraid to challenge conventional wisdom.
And why did you throw Druckenmiller in there? Was it like pure marketing, or do you really
Well,
learn something
I
from?
see, it probably is marketing. I hope that's deleted now at this point if you're reading the description. I like that he doesn't mind, like, he'll get on TV and say one thing and the next day change his mind. And I think that there's, especially if you're doing stuff publicly, there's some real value to realizing that what you say doesn't actually matter as soon as it comes out of your mouth. What matters is making the next right decision. But
Right.
I have no idea what his process is. So for me to say that he's influenced me is kind of a, you know, slightly
Got it.
dishonest, which I try not to be.
Okay. And also, I've been thinking about the process of reading books and like how useful that is to actual investment performance, or
You have the information you need at this stage,
yeah,
right? I would
exactly.
read 10Ks. I'd read industry conferences. I'd read, you know, I mean, to the extent you want to read about the founders, okay, that's one thing. But like reading the next investment book,
Yeah, exactly. I've done like this 8-month internship with one of the best investors I know, and one of the things I learned from him is that he literally read maybe 3 books on investing, and he's outperforming like 99.99% of the people, and so I really question like whether it's more of a intellectual like masturbation or something, or
well, dude,
actually.
no, it's not that. I mean, it's sort of that. But why do people write investment books?
I think it's because they want to launch a fund or something.
Correct. That's right. They're not, I mean, you have some that are in it to truly teach people, fine. The majority of people write an investment book so that they can give it out to people and say, look at how smart I am. I wrote a book. You should invest with me. But that's not, like, you're not the target audience to consume that. So I just there are some that are worth reading. Like I think Toby Carlyle's Deep Value is a fantastic book. I mean they're insanely expensive, but the capital cycle theory books that were done on Marathon, what are they called? The Capital Account is one of them, and then Capital Returns is the other. Those books are insane, right? Like I think those are actually books that practitioners can read and learn from. But the next maybe a book I'm supposed it's in my queue. I need to read it, but like Buffett's Early Investments, that's probably worth reading. But the next book on value investing or some bullshit like that, I just think that's designed to get people to call up the firm. And if that's the purpose of the book, it's not time that I need to dedicate to it.
Yeah, definitely. So I've decided that from now on, if I have like reading time or discretionary reading time, I'll pick up like a write-up or something on Microcap Club, Value Investors Club, and just read biographies, because they're really fun to read, and you can actually learn more from my experience, at least.
I mean, I talked to somebody who said that how they train themselves is they printed off almost everything that they could find on Vic, and they just started at A and went down to Z and tried to predict, hey, do I think this pitch will work? And then tried to see what happened. And then for the ones that were really, really good, they tried to identify what factors sort of drove those returns. To the ones that were really bad, what happened there? I don't know. Is that story 100% accurate? I don't know, but it's probably not a terrible idea.
Is that Connor Haley from Alta Fox?
No, that was not. But maybe he did it too.
Yeah, because he also mentioned something about this, and I think it's actually a good idea. So I might try to do this at some point when I get a printer.
Well, I mean, look, what Connor's building is very impressive, and by all accounts, he's the real deal. So if he says do it, that's probably a better time than reading the next book by somebody that's underperforming.
Exactly. Oh my God. Yeah. I hope fund managers that underperform are not listening to this.
Well, I mean, look, but that's another question. Like, does it really matter if they are? I don't know. It depends what their strategy is, and are they doing what's right for their LPs? And I think that if I were talking to a younger me about the information that I consume about investments, I would just say, think about the incentives of the person that is writing this. Who invests with them? What is their business? How does their business fit into the ecosystem? And how are they defending their AUM? Because I think that influences almost all your communications that you read.
Yeah.
It's a lot to think about all the time, but you just have to realize that everybody's got an angle for the most part. I haven't yet, but I may soon, right? Like I may go into the RIA world or something. And in that case, I hope that I'm very honest about what I'm trying to do. To this point, I've just been on a journey, much like yourself, to try to educate myself about the business and why it works the way it does.
Yeah, it's interesting. I guess, like, if you're a fund manager that's underperforms, at least you have to be like open about it, and I don't know, just not sound like you're the real deal of like, if you want to get great returns, follow my strategy or something.
Yeah, but they have to. I mean, I guess the letters that drive me a little bit up the wall are the managers that spend time blaming the forces around them for their underperformance and talking about macro things. And if you read a firm over 5 years, and once they start underperforming, they're starting to blame the flows in the market, but when they were outperforming, they weren't saying, well, the flows into our stocks are why we're outperforming. It gets a little tedious, but that's the job, right? Once you're underperforming, you have to say the market is overvalued relative to everything that I own. I'm going to catch up. That's why you should invest with me. But like, that's because you got to keep food on the table. I don't know that that's reality.
Yeah, but I think you're also kind of fooling yourself, because to kind of say that, I think you have to believe it in some degree.
Well, and some people are right. it's just hard to figure out beforehand who those people are.
Yeah, yeah, yeah. For example, I remember Nick Sleep. One of the years, I think that it was down a lot. He said like, yeah, like he had some metric about like comparing the undervaluation or something, and he said like their holdings were extremely undervalued, and it turned out to be right. So I guess not everyone that's like some people that say that are actually right.
Yeah. Well, and look, I don't know about Nick Sleep for real, but my perception of is a big driver of what his returns turned into were Costco and Amazon.
Mm-hmm.
Those are two really important businesses that consistently outcompete the competition. And yes, he is doing whatever he's doing today in part because of the multiple expansion. But if Costco traded at 20 times, he'd be just fine, right? If Amazon traded at half the valuation, he'd probably be just fine. So I do think that there's some now. Would he be outperforming the S&P? I don't know. I mean, like I said, I don't know in and out, but I don't know to the extent that you are running capital for outside investors. You need to be honest with them about what you're doing, I think. But it is not necessarily the goal to outperform for all people. The goal could be, how do I just make sure that I'm okay? Right? Especially now when you have the wealth disparity where they are. If people are looking at some of the valuations out there and they say, my goal is to avoid the crazy. And there's potentially a very reasonable case to be made that you maybe should underperform from here if you're trying to avoid the crazy, because the crazy is crazy. So the risk is way higher in the future. I don't know. I don't know what's real and what's not. What I do know is hopefully you do what you told your clients you would do, because if you don't, you should be out of business. And then, hopefully that what you said you'd do will work out for everyone involved. But, I know that for me, the most important thing is that I would act like a fiduciary, and I would try to be as honest as I can with the people that I do business with. And if it meant throw the towel in an index, then if that's what's best for the client, that's what they should do. That's what should be done. Like, it's not really about the ego of performance.
Yeah. Yeah, I think that is a big issue in the investment industry. I think like the performance, everyone sharing performance. If there wasn't a way to share performance, I think people wouldn't be as concerned with that, and yeah, everyone would follow kind of more of their goals, or like wouldn't worry about so much about like the marketing and how people perceive you as an investor. Yeah, but I think
there
it's
is
part of
that.
the
It's
game.
called private equity. No, I'm kidding.
Yeah.
I joke a little. But it's nice to be able to mark your own assets.
Yeah, true. Private equity is also a bit crazy in its own way. So
100%, man, 100%. But boy, if people didn't have to report what the market said and they could just report what they thought the market should say, I think everybody's risk-adjusted returns would be better.
Yeah, for sure. Yeah, so kind of to wrap up this conversation, because even though I would keep talking to you all afternoon.
I got time. If you want to talk, we can talk. I'm enjoying this.
Nice. Yeah, but the last topic I wanted to touch upon, and maybe we can do a part 2 in a year's time and kind of look back and see how stupid we were.
Yeah, probably very.
Yeah, but I wanted to ask you on religion.
On religion?
Recently I've had religion. Yeah.
Oh, this I have no idea about, but okay, let's go.
Yeah, so I just wanted to ask what's the role of religion in your life, and I know this is completely unrelated, but it's not like I'm searching my soul or anything like that, but I think you should give some respect to these ancient books that people have followed for thousands of years, and just wanted to kind of get your opinion on everything and what role it plays on your life.
It plays none, but
Okay.
I don't say that as an informed person that has turned from it. I say it as somebody who just doesn't has not spent a ton of time on it. One of the people that I upset the most as a fan told me once upon a time that I needed God in my life. They may or may not be wrong. I don't know. I don't know, man. I just try I once upon a time won an award. It's probably the most. It's the award that I'm like the most proud of. And let me see what it says. It says the 4-way test of things we think, say, or do. First, is it the truth? Second, is it fair to all concerned? Third, will it build goodwill and better friendships? And fourth, will it be beneficial to all concerned? I won that in high school. I think they gave it to the right person. I try to live my life that way. I try to be a positive influence at children's sporting events. I try to confront parents that, I mean, I did it for the first time in 4 years, but somebody went over the line and I confronted them. They were in front of children and they were cursing and I was not okay with it. I'd like to think that anyone that, knows me when I die says like he was an honest, good man.
Mm-hmm.
I don't know what religion would say. I hope that if I don't accept Jesus as the savior, I don't end up in hell, and that some of what I have done on this earth can serve as a resume. And I think if God and I have an honest conversation about how I lived on this planet, I think that maybe he'd make an exception for me. Or maybe as I'm dying, I'd say, Jesus, you're my savior, and I'll get to the pearly gates. But I'm just trying to live a life that is positive for the community that I'm in.
Yeah, for sure. Sometimes like it's interesting because people kind of apply like religious principles to their lives, but they don't consider themselves religious. I I've avoided sharing my own beliefs on the podcast or publicly, but I just think it's fascinating, and I'm forcing you to share yours, by the way. So
Not
it's not
forced. I
it's
just
not
don't
being
have any
fair.
about that particular topic.
Yeah. But I just think it's interesting because if you really reflect about this, and I think it was Brent Bishore that actually got me to think about this in a deeper way. Like Jesus is literally the best businessman or influencer of all history, and so you at least want to kind of understand why that is and why people followed him and so on. Um, I'm not Christian or like anything like that. But I do feel like having like a spiritual or at least like some direction is useful, as you said, even if it's just like an ethical kind of code of treating people right and hopefully being a good person. And I think that will force you into some directions and like create some filters as well for your
Yeah,
life.
I mean, I think too. I think you need. Well, I don't know what you or anybody else needs, but I think what has been beneficial is to look around my life and are the people that I'm hanging out with treating people in the way that they should be treated, right? And if the answer is yes, then I'm happy about that. And there have been times that I've been in situations that I'm embarrassed of, but I think on average, I think it would be hard to argue I've made the world a worse place. Hopefully, it's easy to argue that I made it better. I think so far I'm close.
Nice. Yeah. That's great, man. Happy for you, and we'll try to follow those principles as well. I mean, I have my own principles, but it's always interesting to understand what guides other people as well.
We got a lot of
So I
life to
think
figure it out. So that's the good
for
news.
sure, for sure, for sure. It's true. So I think that's a wrap for today. I really enjoyed this conversation and wanted to thank you also for making me think about my own process in podcasting and like how I think about things. So yeah, just appreciate your time, man.
Well, thank you for having me. I hope I said something that was smart to somebody. And